Today, we're going to unpack a really fascinating proposal, one that could totally change how money moves across borders for millions of people. So let's just dive right in, and we're going to start with one really big number.
Okay, so what you're looking at is 423 trillion Uzbek som. I mean, that is just a staggering amount of money, right? It's almost hard to wrap your head around. But here's the thing. This isn't some government budget or a giant company's valuation. Nope, this number represents something way more personal.
So what on earth could this massive number be? Well, for the people of Uzbekistan, this is the total annual value of all the money they need when they're working, traveling, or studying outside the country. Think about it. It's the combined value of every single bit of foreign currency they have to buy, hold, and spend. And this number, it's not generated by some fancy algorithm or Wall Street traders. No way. This is the sum of millions of individual human stories. We're talking about real people working abroad, taking a vacation, or trying to get an education. So let's break down exactly who these global money movers are.
Okay, now take a look at this. What's absolutely fascinating here is how one group just completely dominates this chart, the Uzbek diaspora. They account for a colossal 380 trillion som. I mean, that just dwarfs the amounts from tourists and students put together. This is literally the financial lifeblood that connects Uzbeks all over the world.
So, let's zoom in on that diaspora. We're talking about a staggering 7 million people living and working in places like Russia, Kyrgyzstan, and Kazakhstan. Every single month, they're sending money back home. And if you look at the average amounts, they're not individually huge, right? But when you add it all up, collectively, this is what powers a massive chunk of this entire economy.
All right, next up, we've got tourists. We're talking 7.6 million Uzbek travelers. When they go to neighboring countries, say Kyrgyzstan or Kazakhstan, they spend a collective 30.7 trillion som every single year. You can see how this just highlights that constant, everyday need for people to get their hands on foreign currency and spend it without a hassle.
And here's the final piece of our puzzle: students. You've got over 130,000 Uzbeks studying all over the world. They're paying for tuition, for rent, for food, and everything from Russian rubles to South Korean won. Imagine being one of their parents, constantly trying to navigate the complex, often expensive world of international payments.
So here's the bottom line. You have this enormous, constant river of money flowing across borders. But here's the problem. Right now, moving that money is often super slow, it's expensive, and a lot of it still relies on carrying around physical cash. And that brings us to the proposed solution, a whole new kind of financial network that's designed to fix all of this.
The proposal is coming from a group called AsiaPay, and they're pushing this really cool idea of a global digital local currency. The core of it is to create what's called a syndicate, basically a cooperative, to make all these transactions way smoother. But what does a syndicate even mean in this case?
Well, a bank syndicate, at least in this context, is pretty simple. It's basically a team of regulated banks who all agree to work together. They pool their resources, they play by the local rules of whatever country they're operating in, and the whole point is to make handling foreign cash way more efficient for everybody.
And this right here, this quote just nails the end goal for you, the customer. I mean, just imagine it. Being able to buy, keep, and spend, say, Turkish lira or Kazakhstani tenge just as easily as you spend your own money back home. And you can do it all from the banking app you already know and trust. That's the promise.
Okay, that sounds fantastic in theory, right? But how would this thing actually work? Let's get into the nitty-gritty, the mechanics of how this system would build a bridge between all these different banking systems. So for the banks, the whole system is designed to be totally seamless. First off, it plugs right into their existing apps using an API. That means you, the customer, don't have to download anything new, which is huge for keeping you loyal to your home bank. Then, all the money settlements happen securely through the bank's own internal accounts. The big picture goal? Get rid of risky physical cash and replace it with a fully regulated, totally digital channel.
And you know what? This isn't just some idea stuck on a PowerPoint slide. To prove this whole concept works, they actually launched a pilot program in a major international corridor. They wanted to show how this digital currency network could actually function out there in the real world.
And that test market is Turkey. The service is being offered by a company called TurkeyPay, and what they've done is set up a live corridor for the Turkish lira. This allows for actual, real-time digital transactions to happen.
So why pick Turkey? Well, think about it. You've got 65 million tourists visiting every single year.
The demand for Turkish lira is just immense. It's actually one of the top 5 most sought-after currencies on the planet, so it's the absolute perfect high-traffic place to test and fine-tune a system like this.
And here we go. This is it in action. Look at this. A user is just paying at a shop by scanning a QR code with their phone. Simple. And on the right, check that out. Someone is pulling cash from an ATM. Again, just using a QR code from their app. No card needed, it's fast, it's digital, and it's super intuitive.
And all of this brings us to one big final question. Sure, this model is being proposed for Uzbekistan, but the idea behind it is universal, right? Could these kinds of cooperative bank groups, all built on shared digital tech, be the real key to finally simplifying international payments, not just for a few, but for everyone, everywhere? It's a pretty powerful idea to think about.